Hello, Mark Sturdy here of 7 Days Ahead with our highlights of this week's multi-asset technical strategies, week of the 5th of October 2021. In the currencies, there has been a move of some consideration that has added a bear euro position against the dollar to our already bearish view of the yen. That is the first thing we'll quickly look at. There's the long-term pattern, the market struggling to get up through the resistances from these prior lows. But what's happened in the last week is a completion of this double top in the weekly and the daily charts, suggesting moves down to 111 or so, a good weakening of the euro against the dollar. That is in line with our already bearishness of the yen, which is the yen weakening going higher here. Some uncertainty around here, but it looks as if it's going higher here and is part of a general feeling. It's broken up through this top boundary. We think that's going to bounce and go higher. So we are now adding to our bearishness on the yen, our bearishness on the euro. In the stocks, great uncertainties entered the market. We've been variously bullish on the Nikkei 225 recently, but now we are bullish on nothing in particular. Let me quickly go through the main features of the stocks. Here we have the long-term bull trend of the S&P, but it's been thrown into doubt by this pullback through the diagonal, and the approach, I think, is going to test the 4200 support from a prior high. In the detail, we've seen the initial breakdown, which we were unperturbed about, but the bounce has failed. So we have the breakdown through this long-term, since May, medium-term trendline support, and the rally back up has failed beneath that broken diagonal. So it's a retesting of the lows here, and that's why we think it's going to test 4200, which is the first substantial prior high support, which was tested and bounced off in July. Only a break of the 4200 level would make us turn medium-term bearish. Similar picture in the EURUSD. It's actually a little more bearish than that. It's broken its diagonal bull trend support, and short term it looks rather bearish as a sort of malformed double-headed head and shoulders reversal, possibly on confirmed close beneath, say, 4,000 with this possible neckline. Unlike the S&P, though, there is massive support beneath the market in the long term. So unless the market were able to break the 3,700 level, we would see it as, in the long run, supported, unlike the S&P. FTSE has been rather more stalwart than the others. In the short term, it has drifted, but not dramatically. The Nikkei, on the other hand, has completely given up the gains of the last week, or the week before the last week, has now fallen back into a sort of trading range. Only if it broke 27,000 would we get medium-term worried. Moving on then to the real drama in the markets, I think the unambiguous bear market of gilts, which we saw last week and has continued to confirm. Massive medium-term head and shoulders reversal here, suggesting higher yields, lower prices. So let's just go back over the long-term break of the long-term trend line, bear trend resistance, broken quite clearly here. In so doing, it's formed this reversal, suggesting much higher yields. In price terms, of course, we've got a bear market in the bond prices. All these bond markets have bear trends in their prices, but only the gilt has this confirmed, marvelous reversal structure that signals much higher yields, much lower prices. The others are rather indistinct as yet. The other big strong feeling we have is for the bullishness of oil. We have now broken the quarterly trendline resistance. In all time frames, we've broken the monthly trendline resistance. The market is now, I don't think it's any secret, above 77.70. So we've broken. This was for some might have been a pause for thought that from the horizontal resistance from these lows, that has now been broken. Perhaps it depends slightly on the close on the month, but the break of the diagonal in itself speaks volumes. In terms of the weekly, This is the November contract. We have a push above prior highs, a bounce off prior highs here, a very well constructed bull trend. And we have, of course, the day chart, a breakthrough prior highs, pull back to test the support there, found to be very good, bouncing higher still. Gold, we are pausing slightly. We're interested in the triple bounce off this prior high support, 1725. We'd want to see a medium-term break of the downtrend resistance, something above 1850. The day chart suggests a break of the near-term downtrend resistance, which is good. Almost a day key reversal here, but not achieved. So this is a nice bullish indicator, but we'd want to see a break on the week of around this level here, this diagonal. That's it. Thanks very much.